All right, welcome to another trade review. We're going to be talking about these two trades I've taken so far during the Asia session for Thursday, January 30th, 2025. Now it is the 29th as of right now, but this is for tomorrow's session. So let's go ahead and get into this first trade. Now the first thing I noticed that got me into this trade was this new day opening gap we had at the Asia Open. We traded into it here, came, took out this low, and then we rallied higher. We created this fair value gap. We traded back into the fair value gap, but we had no reaction out of it through the new day opening gap. And as you can see right here, price starts to accumulate right under the new day opening gap. Now the moment price starts to expand away from this accumulation, I jumped in with 2 micros and I was targeting this previous swing low. There are equal lows right here, as you can see right here, equal lows, so that forms a strong draw on liquidity as well. So price starts to expand, I jump in before we take out those equal lows, and real quickly on this second candle I was up about 50 bucks. So 50 bucks in the Asia session / slow markets. In a matter of a minute and a half, I closed out that trade, and I ended up taking a nap. I was watching price around here, and I fucking fell asleep, drifted off, and yeah, I came back. Price was around here. Now, when I came back and I woke up, I noticed a few things. The first thing was we had this right here. Let me turn executions off real quick. The first thing I noticed was we had this swing high here and this swing low here. So I took my projections, I projected out that move, which gave me more information. As you can see right here, 50% of this range, we had this fair value gap that was formed. We trade above, back into the fair value gap, prices reaccumulating right here. Again, we had accumulation here, and then now we have some reaccumulation here. So price is reaccumulating right above this fair value gap. We dip into the fair value gap, hit that 50% of the range, and then price rallies, which led us into our next session. So I was awake at this point, and I had saw price rallied higher, and I was also looking at ES. At this point, the new cycle for ES had already taken the previous cycle high, which was right here. This 90-minute cycle here. ES had already taken this 90-minute cycle high, but here in Q did not. So I was watching and paying attention to see if price wanted to shift bearish or if we wanted to continue this move higher. So looking at this 90-minute cycle with the open, low, high, close ideology in mind, we have our 90-minute cycle open here. We set a low, price rallied higher, fair value gap here, trade into the fair value gap. We do not get any continuation lower, putting in any new swing lows under here. Price rallies higher. Again, we create a small fair value gap here, and then price starts to reaccumulate around that fair value gap. This is when I looked to begin to frame an entry for my next trade, which if we go ahead and turn executions back on, you can see I ended up entering right here. And I'm going to get into why I entered right there in just a moment, but I want to take you guys to the 1 hour because there's a line right here above this negative 0.5 standard deviation, and that line does serve significance. So we're going to go out here on the 1 hour, and that line that's right there above that negative 0.5 standard deviations is the bottom of this bearish order block. Why is this a bearish order block? Price took liquidity above the marketplace into a point of interest. This is the event horizon between the current week new week opening gap and previous new week opening gap. So event horizon right here, we took liquidity above into this event horizon, and then we sold off all throughout London and the New York session today up until the end of the day. So order block, drop down to the 1 minute. That's what this line right here is. Right, and I'll just label that. That was the negative order block right there, right? So price comes back up to it. And at this point, when we trade back up to it, if I'm bullish, what do I want to see? Do I want to see us run into it, market structure shift lower, and then a continuation lower? No, that's not what I want to see if I'm bullish. Why am I bullish already? Because we had this move up. So if I want to see a continuation, I want to see exactly what happened. We run into it, we accumulate at it, we get this little false move here that's quickly engulfed, and then what happened? Price rallied higher. Now, why did I choose this candle for my entry versus any of this accumulation in here? Why wasn't I entering in here? Why did I decide to enter here? So I'm waiting, and then the moment I see price start to close outside of the previous candle's range, so right here, you see how this candle closes above this candle's range? That lets me know price may want to start to push higher. So the next candle, we get this nice close above all of this, right? And it's also at the bottom of a, I believe that's a new day opening gap right there. Previous new day opening gap, I believe so. Yeah, it's it's actually a new week opening gap. So previous new week opening gap, we're right at the bottom of there. We've closed above all these highs over here. So at this point, I'm thinking it's likely time for the market to start wanting to expand higher. So I waited for that candle to close, and then right here on this pullback, I entered my position. I could have done a little bit of a better job, like averaging in, and I could always do a better job of that. But for the most part, I'm only taking trades I'm confident in, so I don't suffer too much drawdown. So I entered right here, 15 micros, ended up suffering like 112 bucks of drawdown, some stupid shit like that. Quickly rallied above, and then boom, 10 contracts came off there. I held the last 5. My first sell, my first sell was like at like when my P&L was at like, my open P&L was like $90 or some shit. I don't know. It was like $90. I locked in 60 bucks. I was already up 40 bucks one day, so I was up 100 bucks. And then my second sell was right there at the -1 standard deviation, and that took my whole position off. I was in for 5 micros at that point, and it ended up being it was like around a 10-point trade, so ended up being $100 off of those 5 micros alone. Price continues to rally here. Where do we go? -1.5 standard deviation. We accumulate, blast through. Where does price go? -2 standard deviations. Blast through it. Pull back. Where are we at? -2 standard deviations. Pop. Pull back. Where are we at? -2 standard deviations. Pop again. New quarter. Now, if we are to remain bullish, where would I think price is going to go? I believe we're going to go, above 2.5 to above 2.5 standard deviations, back to the event horizon.